I promised you I'd show you something a little bit different than expected. However, I have no idea what happens in this next example, so I'm not sure if this is one where something less than expected happens. I was going to look for one, and then I realized it's probably better just to move onward in time and keep moving forward on the charts. This time around, instead of just looking at the mechanics of the trade, I want to take it a step further, and I want to move forward in time on the charts. As you can see, we got out of our sell position far earlier in both cases so far than necessary. We could have ridden this thing. Each one of these trades went much farther than our exit, which I think should give you some confidence that if you're not around when the trade is exiting and you miss it for some reason, there's some forgiveness here again on the exit. And in fact, you could do better than others if you hold on for a little bit longer than just the baseline. So that is a possibility. And for those of you who like to move to break even, take a part of your profit off the table, and let the rest of it run, well, we're definitely going to look at that example. And I want to do that on the next trade. Let's move forward in time on the charts here. And as you can see, what I'm looking for is for a steep move. I'm looking for a sudden move in one direction that's quite severe. If I see a severe movement in one direction, that will allow me to draw a entry line, a steeper line, and then I can worry about moving backwards in time. And there we have it. I can worry about moving backwards in time and getting a baseline. Well, I think this movement right here in this area is pretty steep. It's pretty severe, and the pair drops off really quickly, and it starts to show me almost a sudden movement straight down. I circled that, and now I'm going to delete it. And what I want to do at this point is I want to think about the reversal that is likely to happen because it's moved so severely in one direction. At the end of a trend, we can often see severe movement in the direction of that trend as there's exhaustion and euphoria at the same time. Exhaustion from buyers who got in early on that trend, giving way to euphoria from traders who might be really excited about the trend only near the very end and might not recognize that that's the case. We recognize that's the case because we've been looking out for this. We know that that sudden movement, that real strong movement at the far right here, represents sellers getting just euphoric about selling it and panicking or getting in really fast or, ramping up their lot sizes and whatnot. What we want to do here is we want to look for 2 points to draw our baseline. So I'm going to take the highest point that I can find on the chart right there. That's a triangle instead of a circle or a square, whatever. And then I'm going to look right over here at this move, this turning point before sudden drop-off. Those look like two really good points to me. And I'm going to draw my line there. And I'm going to extend it out as far as I can. Now, why couldn't I draw my trend line across these highs? Well, I could, but that's incorporating. That means there's a break already. I want to draw a baseline across something that hasn't broken yet. So I draw it where I decided, where you just saw me draw. Now I've got a blue line that's all messed up. I want to drop down to the 15-minute chart and I want to get an entry line situated. Now this could be difficult because it's a very steep move. It's the steepest move we've seen so far, but I can start that line at the intersection on the second anchor or the second pivot of my baseline. That's where I can start my entry line, my blue line. And I'm going to extend that out across the second sort of reversal area that I've gotten recently. And there's my setup. I'm going to make the candles a little bit smaller so we don't see so much. We can see a little bit more. And then I'm going to move forward in time. And you can see this is a trend and it's really dropping off the face of the earth. And what I like about setting this trade up, what I love about the two trendy trade, is that I've got time now. I don't have to, as soon as I draw that entry line, it doesn't trigger a trade. I'm not in the market immediately. Now I've got time on my side. I can wait patiently for a trade. All right, that qualifies. I mean, even this one is a close above my entry line. Not a very convincing one, is it? It's not very convincing. It's not like a huge bullish candle just shot up through the entry line and said, hey, look at me, I'm going back up to the baseline. But it qualifies. It's a close above our entry line. What I want to do is make the candles a little bit smaller so I can get everything set up and you can see it. I'm going to place my stop loss down here below the low. Stop loss is 56 points plus, let's go 15 points higher than that. Let's go, whatever. I'm just going to put the stop loss down there. That looks pretty good. That's a stop loss of about 75. What was it? Let's see again. What is that number? 56 is the low, and I want to go 56 to 66. That's 10 points to 72. That sounds good. 72 pips down. Now, this time around, let's compare our stop loss to our potential take profit. If it rose up immediately, it would be a 1-to-1 risk to reward ratio. That's the comparison I'm going to make in order to take the trade. That's about a 1-to-1 risk to reward ratio, and that's acceptable to me on these trades. I know that for some of you, you want something a little bit better than that, and you're more than welcome to hold out and wait for something better. You can wait for something better in two ways. Number one, you can just not take the trade yet and wait for the currency pair to drop back down and get in at a more favorable price that's further away from the target and closer to the stop loss. Or you could just cancel the trade altogether and move on to another example. I'm going to take the buy trade just for the sake in particular of seeing if we've made a correct decision or not and showing the mechanics of the trade. Looks like the trade is moving in our favor. Looks like the currency pair is rising up. Looks like it's evening out a bit, but still the baseline is moving down to see us, and our candles are moving up to see the baseline. And boom, we hit the baseline. And this is where I want to talk about ideas for extending our profit. We're up 45 pips on a trade for which we originally risked 70 plus. Now, what can we do? Our options are we could split our trade into two, take half of the profit right now and ride it further. Or we could simply move our stop loss to break even. Now we can lose nothing on the trade, and we can ride it for a little bit longer and see if we can get at least up to the 70s. And look at that. We got up to the 70s mark, and that made it a 1-to-1 trade. And why don't we go ahead and close it? So that's 3 trades so far. All of them have worked pretty much in the way that you would expect a 2 trendy trade to work. But we need to look at lots more examples to help you understand exactly what we're looking for and exactly how it works. So here's another example coming up.